But in the meantime, let's just continue that story, get a little bit more on the investment opportunities in the Middle East. Joining me now from Abu Dhabi is ADS Securities Chief Market Strategist. It's Noor Al-Hamri. Noor, great to have you with us this morning. I mean, it is the big story, isn't it? NCB in Jeddah, in the region, almost trumping the stock offerings on a global basis this morning. What's the feeling down there? I mean, is this something which is, I suppose, it's a real step forward for Saudi, isn't it?
Well, yeah, it's another good morning for the region, and also another historic day for the region, especially in Saudi Arabia. Despite all the noise about Sharia or the fatwa a few weeks ago, however, at the last days we had so far, we have the around 1,500% oversubscription. So at the end, have a look at what happened before. Also, you have more than also only for Islamic banking in Saudi Arabia, while the rest are they're not Sharia compliant. So at the end, the last days we had somehow very good opportunities for the middle class, because everybody knows that the share right now is undervalued or significantly undervalued. So it's another opportunity. Saudi Arabia is opening the door. Don't forget that we have the next year will be good for the foreign investors to start trading in TASI or in the Saudi stock market. So it's another good opportunities also, as far as we have also the financials right now and those services. So I think it's going to open more and more opportunities for foreign investors, or even also for the region.
No, let's talk more broadly about the broader context of markets. I mean, we had the S&P and the Dow both closing at record highs at the end of last week. Europe trimmed its worst loss since 2013. But you seem to think you're not so much a buy on the dips man as sell these rallies. You think we're going to be quite a substantial market correction. Why?
Yeah, well, basically, I always look at the history. Have a look at what happened to the S&P or Dow Jones, or at least the stock market in the U.S. after ending QE1, QE2, Operation Twist, and also Operation Twist 2. We had this final rally before the major correction begins. So basically, it could be the same scenario right now, despite the fact that the Federal Reserve ended QE. However, if you look at the numbers, especially in the labor market, the Federal Reserve have mentioned many times that the labor market slack continues, and then they came in last week and said that the risk is diminishing. However, have a look at why the unemployment rate went down. It went down because of the shrinking labor force. The wages also continue to go down, and the inequality remains higher. Also, the gap remains higher. So for now, we can have a look also at what happened last week. GDP numbers. That's right. We saw 3.5% higher, but don't forget that the spending or defense spending added almost 0.6%, and the numbers came in last week also for the income and spending or personal spending. Also shows that we could be like, well, we might have a revision to the downside. So for now, the U.S. economy for us is on a test until the Q1 of 2015. Will the economy be able to recover or continue to expand without the help of the Federal Reserve or the government support? This answer will be, or the answer will be within the next few months, which we believe that we might see some kind of decline or slowing down. Don't forget also that the rest of the world also continue to slow down, whether in Asia, whether also in Europe. So this might affect the U.S. economy as well.
Rates. When will they actually move their rates higher? Given everything that you've just said to me, does that change the context of when you see the U.S. moving on rates?
So far, I have a lot of doubts that they will be able to raise rates. If you look at the home prices, basically, we are at the lowest level since 4 years, and this kind of numbers so far. Imagine if they raise interest rates, what's going to happen to the housing markets? We've seen the slowing down since the tapering in January. We've seen seven consecutive monthly declines, and also 10 monthly declines from the peak in last October. So I don't believe right now that they will be able to raise rates, because right now they were going to shift their concentration to the inflation, which basically the Federal Reserve says that inflation expectation is not looking good. And even Bullard a few weeks ago, before the end of QE, he came in, and he is a very well-known Hawk member. He said that the Federal Reserve may consider delaying the QE. However, they ended QE, but the Federal Reserve knows that they can intervene at any time if needed.
No, we are going to have to leave it there. Thanks for joining us on Countdown this morning. Noor Al-Hamri, Chief Market Strategist at ADS Securities.
6:41 here in London.